We start first with the fixed income market as investors have their eyes set on Monday's bond auction, where 2.5 trillion naira will be up for grabs. Traders at UBA say they expect investors to apply caution ahead of the auction. Well, Kenneth Onuoha, Assets and Liabilities Team Member at UBA, joins me now for more on this market discussion. Kenneth, thank you so much for joining us on the show today. A lot of eyeballs are on next week Monday's bond auction. Let's talk about the size of this auction, the new papers, the 7-year and 10-year paper, and the likely subscription rates that might unfold on Monday.
All right, thank you. Good afternoon, David. How are you today?
Very well.
So yes, like you rightly pointed out, on the 14th of February, we received an offer circular where the DMO stated that 2.5 trillion would be up on offer at the bond auction on Monday, which is on the 19th of February, with settlement being, of course, on the 21st of February. Now, what we saw was, for the first time, there were just going to be two maturities, pretty much the 2031 newly issued 2031 and the 2034 maturities. But where the interesting part is, we saw that the sizes would be 1.25 trillion for each of these maturities. Now, this is the first of its kind. Clearly, it is in line with the government's commitment to focus more on domestic borrowings. So, essentially, if we to take a cue from the NTB auction that happened sometime last week, we would expect that subscription levels would hit would be quite high. Remember that the last auction in January, we had 360 billion up on offer across 4 maturities, 2027, which was newly issued at the time, 2029, 2033, and 2038. And we saw stop rates printing at about between 15 and 16.5% respectively. We do expect subscription levels at this auction to go high. At the NTP auction, we saw subscription levels hit as much as 1.98 trillion against the 1 trillion that was up on offer. So if we were to take a cue from what we have seen in the past auctions, we would expect that this rate will go. With this subscription levels would of course go high. Investors are pretty interested in it. The idea is to of course attract foreign portfolio investors, and we will see very high subscription levels. And of course, we also expect to see that the rates would also of course go higher than the printed at last. These are new issuances, so yes, we expect to see increased rates at the stop rates at the auction as well.
No doubt we're seeing bigger volumes here at the auctions as they unfold. Let's also talk about one of the latest directives we also got from the Central Bank of Nigeria, directing banks to halt the payout for personal travel allowance and also business travel allowance. Let's talk about that and how the pendulum is swinging at the FX market. Concerns arrive, especially at the fact that we are seeing the Naira tipping that 1,500 naira mark. For so many, how low will the naira go even further? I know you're conservative in your take on this, but what's the outlook here?
All right, so yes, you did rightly state that the CBN did issue 2 circulars regarding the FX reforms. Remember that the CBN governor had promised in one of his speeches that the plan was to ensure the FX stability and transparency and to ensure that there were no malpractices in the FX market. Now, that led us to seeing the circular issued by the Trade and Exchange Department yesterday on the payout, this continuation of the payout, cash payout on foreign personal and business travel allowances. What we now would see going forward would be payments only allowed through electronic channels, including debit and credit cards. Of course, that was not only the reform that we saw yesterday. We also saw a circular around cash pooling, wherein IOCs were also mandated to ensure that there are no more immediate repatriation of 100% in repatriation of proceeds from FX, from crude oil exports to their parent companies offshore. Now, what the circular stated was that we would see the proceeds staggered such that 50% will be allowed to be moved immediately, another 50%, of course, after 90 days. What the CBN is trying to do here is to ensure there is a stability in the FX market. We have seen the dollar hit as high as 1,607 naira to the dollar at the NAFEM yesterday. That was an intraday high as of yesterday. We are, yes, conservative, but we do expect that with the reforms that we are seeing currently, the Naira would obviously stabilize. The plan of the central bank is to ensure that they defend the Naira against all other currencies. So yes, we would expect to see that over time, or given with time, we'll see that the Naira obviously achieve that level of stability we're expecting. How low it will go, time will tell.
Well, we'll definitely keep our fingers crossed. Kenneth, thank you so much for your time on the show today. It's been a pleasure speaking with you. Do have yourself a lovely Friday. Well, that was Kenneth Onuoha, Assets and Liabilities Team Member at UBA.